Hello and welcome to the big picture. After months of all-round clamour for the repo rate cut, the RBI governor has finally obliged. However, the rate cut coming as it did 3 weeks before the quarterly review took everyone by surprise. The rate cut coming as it does with other positive indications in the economy, with inflation under 5%, trade deficit narrowing and industrial output looking up, should send strong signals for the much-needed economic recovery. We will look today at why the RBI governor decided to go ahead with the rate cut earlier than expected, how it would help the economy, and what is it that the government should do now to assist economic recovery. Also, if these rate cuts indicates a change in the monetary policy of the RBI, and if it will be sustainable over a reasonable period of time. To discuss this, I have with me Arvind Virmani, economist and former advisor to the Ministry of Finance, Renu, Kohli, former staff member, RBI and IMF, Prof. Bhanumurthy, member, National Institute of Public Finance and Policy, and K. Badarinath, editor, policy at the Financial Chronicle. Welcome to all of you. Renu, I would like to come to you first. Why do you think, we discussed this last month, about this issue sometime, last month, and there was a general feeling that he will wait till February or maybe a little later also. Why do you think he has gone ahead and done this and taken everyone by surprise?
Well, first of all, I don't think it is that much of a surprise because in December, the central bank in its statement had clearly said that they could review their monetary stance, including outside the scheduled meetings or the formal reviews. So there was some bit of expectation or indication from the central bank that they could ease or change the direction of their stance even otherwise outside the review. So the logical corollary was that which event would trigger such a review. One of them was, of course, the inflation data, both consumer as well as producer price inflation. And as we have seen, they saw both sets of numbers on January 12th and 14th. And given the fact that the base or the statistical exaggeration of downward exaggeration of inflation rates in December was reduced, and they saw that the core inflation, which is excluding food and fuel shocks, which reflects demand evolution or evolution of demand side pressures, had dissipated. So it was based upon that review. So in that sense, it wasn't such a surprise. The second event was, of course, a lot of speculation whether it would be linked after the budget. Right. So in my view, the surprise element has been not so much. Second, the review is definitely taking into account, I think they are more or less satisfied that the disinflationary impulses that they were looking for have got well entrenched. And I think the more important point over there is their review of inflationary expectations, which is directionally downwards. And as they pointed out yesterday, that definitely for the first time since September 2009, these are downwards. Okay. So in the new monetary policy framework, that is definitely, since what agents expect and inflation being an expectation variable, the expectations of 3 months ahead or 1 year ahead are in the downward direction.
Okay. Mr. Virmani, were you not surprised?
Well, actually, in this room, 2-3 months ago, in 2 different programs, I pointed out that the inflation trend has decisively changed in India. Of course, globally it was happening.
Dr. Raghuram Rajan was not convinced, at least last month.
Right, so I'm coming to that. So the issue was, when will the central bank accept that or be willing to act on this? Unfortunately, there were a number of market players who I call the Wall Street, Chicago-oriented people who did not recognize or see this change in trend. So it was basically a matter of time when this trend would be recognized, and when these market players who are quite bright people, I'm not saying they are bright, but even bright people get stuck on certain notions which have changed. So the question was, when will this translate into, when would they recognize the trend and change their expectations? And I've been following over the last couple of weeks that what they've been writing. For example, this kind of view which I asserted 2 months ago was attacked in the papers by their own articles. They didn't name me. But over the last 2 weeks or so, I've seen that the tone had shifted, whether on TV interviews or on papers. So it was bound to happen. But I must admit that I discussed 2 days before.
So you're saying that you have been vindicated now?
Absolutely.
Or
but
you think
I must admit that
vindication?
When somebody told me that this will happen in the next week or two, I disagreed. So I must say that I did not expect the governor to change his views so fast. I thought he would wait further till all the market had changed their views.
But you're happy that it changed?
I am very happy that it has changed. And just as one small add-on to that, many people were saying they've changed, but they've done too small a number, 0.25. I am not concerned about it. To me, the key thing was a recognition that trend has changed and to change the monetary policy. Once that happens, these numbers are best left to the central bank. I don't interfere in that. I'm a member of the TSC, but I thought it was very, very important. It's not a question of vindication. I felt that it's very important for economic growth of the country that this stance be changed and that fiscal policy be tightened, because I think that's the appropriate policy structure for India at this point in time.
Okay. Bhanumurthy, you were not too confident last month when we discussed this, that that he could go in for this.
Yeah, no, I think
you think between the last month when we sometime in December we had a discussion on this and now there were reasons enough for him to take this sudden decision?
No, I don't see that. I mean, even if you look at the recent inflation numbers, both the inflation numbers have increased slightly, marginally compared to what we have seen during the last round of credit policy. So I would still think that this is more of a hesitant step by the central bank governor.
Are you trying to indicate that he has succumbed to the pressures?
No, the reason why I'm saying is hesitant is from the last round of credit policy and now, not really much has changed. In fact, in the last month when we discussed, I would expect central bank to focus more on the 4.1% number
fiscal deficit
than the inflation numbers, because
but he seems to be saying that the indications are that the government may stick to that target.
No, that's right. I mean, what I'm trying to say is that 4.1% should be the number which central bank looking at the moment, because the recent decline in inflation is not really because of domestic policy measures. I'm not really sure whether the tight monetary policy has led to decline in the inflation. Largely because of international oil prices, we have seen the decline in the inflation and the inflation expectations also. But as I said earlier, I would have expected him to wait for the budget to come up and look at what kind of fiscal policy stance that he is going to take, the central bank government is going to take. So he could have followed, the monetary policy could have followed later.
So you think that he was hasty?
Hesitant.
Hesitant.
Yes.
Dr. Virmani, how would you react to that? I'll come to you, Badri.
Well, the fiscal obviously matters, but I don't agree. I've been doing this analysis and every single indicator of inflation has trended down. And this has become absolutely clear to me 2 months ago. 4 months ago, when I was...
No, it may have been clear to you. If I look at it from the RBI governor's point of view, what he said last month and what he has done now, what has changed between these, except, of course, the crude oil prices have come down drastically.
Well, as I said, the question was of, with any change in numbers, you take IIP or any other number, the issue is always, I was in government for 20 years, the issue is always one of how much is temporary and how much is a trend change.
Right.
That's always the issue.
Absolutely.
In every single indicator of macro.
That's what Rajan also made us believe.
And therefore, that is why I keep emphasizing the trend change, because the RBI or the governor was perhaps uncertain where there is a clear trend change.
Right.
Not everybody has the same...
He seems to be convinced.
He was now convinced that there is a trend change. That is what I am saying.
My reasoning on this recent decline is, it is more of a decline in the intercept rather than a trend.
Okay.
Even now, India has the highest inflation compared to any country in the world.
Badri, well, I think Dr. Virmani was looking at you about certain things which you seem to have
that earlier.
Yeah.
My issue is that sooner or later he has recognized the fact that there is a proper trend, and he has recognized that trend, And I guess, though it was an element of surprise, possible that he has done it, and it's in the right direction that he has taken this view, and he should go ahead with this and follow it up even before the budget and go ahead for a second cut.
You think the second cut is necessary at this point of time, or
of course. And the moderation that Bhanu was talking about, that can follow maybe for the third cut after that, perhaps.
So, what are you trying? Are you trying to say that you are also convinced that this was a decision which had to be taken now, or you think that there were, as Bhanumurthy says, it's a hesitant decision?
I guess it's not a hesitant decision, if he permits me to say so, in the sense that, all the parameters were looking good and made enough case for him to cut the rates. And what is the number is debatable. How much is the room he has to cut that is different. But the signal he has sent that there is a firm case for the rebound in economy is what is important.
Okay. Renu, now the question is this. Now that he has done this, this has been the clamor from all quarters virtually, except people like Bhanumurthy probably, for the last several months. Now that it has happened, what do you expect the government, how do you expect the government to follow up on this? Because now the ball clearly seems to be, at least the RBI governor seems to have put the ball in the government's court.
In a sense, yes, because the central bank has clearly indicated that the fiscal position will matter. Now, the government has constantly reaffirmed that they will stick to the budget deficit target of 4.1% for this fiscal year, 14-15. But for the next year onwards, one is not so sure, because there has been a lot of public advocacy for breaching the path which is already accepted and laid down earlier from 2012 onwards, and that there should be fiscal pump priming to boost growth. In my view, that's the wrong step to take, and I agree with Mr. Virmani that the correct mix of macroeconomic policies that is required for India at this particular juncture to boost growth and in general help out the low point of the economic cycle is actually more aggressive monetary easing and sticking to the fiscal consolidation path. Simply because, within the narrow confines or the boundaries of what is accepted, they can certainly revive capital expenditure, but it shouldn't be accelerated beyond the accepted pace, because that is again going to bring about a resurgence of inflationary pressures. It's going to undermine what the Reserve Bank has achieved and has been doing so far, and we will be back to square one.
Okay. Dr. Virmani, would you agree with that?
So,
what is it that the finance minister needs to do?
So, what I call the macro pivot requires that the fiscal policy be tightened. Now, my reading or my suggestion on that is to hold the fiscal deficit targets, but reduce the revenue deficit further and use the space provided to do more infrastructure investment. Most of the clamor from business and even some economists actually is coming because they say we need a boost in investment because private is not reviving.
Right.
Okay.
So public investment.
Now there's two ways. One is to reduce the monetary policy, the interest rate more sharply, as Bhanu as you mentioned just now. Or the other way is to make what I said, make more room by reducing the revenue deficit further, which is just another way to put it is the quality of expenditures, to reduce the subsidies and current expenditures as we call them and increase the capital investment expenditures. That would be the optimal policy in my view. Of course, we all know politically optimal does not always work.
Exactly
so there will be some compromises in reality.
That's exactly the point. Bhanumurthy, that's exactly the point. That now the finance minister will face this tough challenge of having to cut subsidies. At least that's what people seem to be suggesting to him, that you need to cut subsidies, you need to increase public investment, better tax revenues. You think these are all easier said than done?
No, and in the current year, I think the kind of number that we have on the fiscal, it seems to be very difficult. I mean, I think last time you made a show where you already covered 99% of the fiscal deficit.
Right.
So given that, I doubt whether they'll be able to contain the fiscal deficit in terms of 4.1%. And at the same time, as Dr. Virmani is arguing about revenue deficit, nobody knows what is the revenue deficit target within the 4.1%. I think it's 2.9%. It's not even popular here. So I think his point is very valid. I mean, we have to go for expansionary fiscal consolidation. I think that is the main focus of the fiscal consolidation map. But my point is, if the purpose is to revive the growth, which is everybody wants to do that, including RBI as well as central government, is that the interest rate channel that is going to work? I think that is something that I've been arguing. At the moment in India, as far as my analysis goes, the interest rate channel is very, very weak. I think it is the...
It's just one of the factors.
It's just one of the factors. I would say it's an insignificant factor at the moment. I would say the credit offtake or the bank lending channel is the more, I think, acceptable channel at the moment. And even in the previous shows, I have argued, even if you reduce the policy interest rates now, you are not going to see a sudden jump in the credit offtake, except that if you tweak, Union Bank of India can reduce the lending rate by 10 basis points, but not the major banks. They are not going to reduce your lending rate, rather they are going to reduce their deposit rates.
Dr. Virmani?
So, again, I have an unconventional view. This is the view of a majority of economists. See, my view is that the key issue here is consumer durables. And I'll give you one small number.
Negative.
The IIP index today, the latest, is where it is lower than it was 4 or 5 years ago.
Right.
Okay, if I remember, less than in beginning of 2010. So my point is, it's not so much the capital expenditures which most people focus on. I agree that reduction of even of 1% is not going to give a big boost to investment, but I think it can make a big difference to consumer durable consumption. And there are two reasons for this. Is both
the EMIs go down.
Well, it's more than that. You see, most people think in financial terms. I'm going to give you a real story. As I said, it's unconventional. You can believe it or not. But in my view, both the buyers of goods have to have a longer term perspective, right? So they are thinking forward. What the change in stance does is, it means clearly that the RBI doesn't think, because they made it very clear, once they change the stance, they are not going to suddenly change back. So it gives confidence that things won't suddenly become opposite. That's one thing. Even the buyer has to see that. And secondly, the lenders, again, those who want to lend. It's not that 100% of the banks will lend, but those who want to lend have the same problem. Let's say they want to reduce and expand their portfolio. They'll say, okay, we will take some risk, but at least there's no risk of a sudden reversal of the RBI.
So you are saying that both the buyers and the lenders will,
that's right,
will feel comfortable that there is
a stable, consumer durables is concerned.
A stable regime is apparently there.
It's changed, yeah.
Has changed. Yeah. Badri, what he said, what Bhanu said, I need to know.
About the subsidies management, I have a firm view. The subsidies management is possible at this level, especially when the crude prices are so low. And you obviously have not passed on the benefit, complete benefit of crude prices to the people. And henceforth, he has enough space to manage the subsidies. And food subsidy...
So, are you trying to say that there will be no need to cut the subsidies? No, or what are you trying to say?
I guess at this level, I guess he will be able to manage the subsidy at whatever 4.1% fiscal deficit. He will still be able to achieve...
Without having to cut
further
subsidies.
At this level.
Cut further, okay.
See, yes. I mean, just to add a point here, there was never a subsidy if you look at in the oil sector.
No, we're not talking of oil sector, we are talking of the
so in a sense,
other
the
things
decline in the oil prices.
Food fertilizers.
So there are other subsidies.
That is the interesting, that's a separate debate actually about what, about the whole oil subsidy
business. The decline in the oil prices would have an impact on the revenues of the government. That's the point I'm trying to say. It has an impact on the government revenues itself, not just on the subsidy component. We get almost 3% revenue from the oil sector.
Right.
For the central government. If you add state government, more than 4% of GDP comes from the oil sector. When there is a decline in the international oil prices, I think there is going to be a hit on that particular component of revenue.
Oh, that's interesting. You want to make another point?
Yes. Apart from the oil subsidies that Bhanu was talking about, also in the fertilizer sector, the fertilizer prices globally have fallen in a big way. To that extent, the subsidy levels would go down for the government. Third, the food program, which was earlier done by the UPA government, has not taken off to the extent it could have been taken off. So, on these two fronts also, he is going to save in a big way. Henceforth, subsidies will not be an issue for the finance minister to keep the fiscal deficit at 4.1%.
No, but Badri, I think the point is, this is based on 13.4% assumption of nominal growth. Now it is 10.4%. There is a 3 percentage point reduction in the nominal growth.
Yes, actually, I would like to get Renu in all this.
Actually, the only the negative part is on the revenues, because if nominal GDP is going to grow slower because of lower inflation, then you have some problem with the revenue side.
Absolutely. Renu, how do you look at this? You know, these are very interesting ideas which are coming up here. Now, how do you look at this, that the finance minister will have the room to keep the fiscal deficit at 4.1%, as Badri seems to be very optimistic about?
Well, the government borrowing program remains unaltered as of the moment, and so we don't see any indication that there will be a breach. There is the issue that revenues have declined very significantly. They're very weak, particularly service tax collections. And disinvestment targets are currently unmet. So from the borrowing perspective, we don't see any change in the borrowing schedule, which would tell us that the 4.1% target would be met. Now, as to how it would be met, since 99% of the deficit is consumed, obviously there are going to be sharp expenditure cuts, both wherever there is space. So I guess that's how they're going to meet it.
Dr. Virmani, we have already been hearing about sharp expenditure cuts. In fact, you know, in major social sector spending has been cut quite a bit. You know, there are a lot of concerns being expressed about that. Is that the way that you think the government will go ahead? Is that the way? Is that what we are going to look at when the budget is presented next month?
Well, the concerns I heard earlier was really on the disinvestment program was not on track.
Right.
So I think they will make up on that. That is my judgment. You know, these are all guesses.
They have just 1 month left.
Yeah, but most of that is was scheduled for February. Yes, they've delayed too long. Unfortunately, that's a thing which governments keep doing. I don't know why. They always,
you have been in the government, you should know, but you can't ask us. You should tell us.
Okay, well, I'll tell you. They always miss the peak of, you know, when there's a boom. But the thing is that the slow processes, I mean, they just have to reform these drastically. And I guess the finance minister has not yet got a full handle on the ministry yet.
Do you agree with that, Badri?
See, there are two things, Dr. Virmani. One is the non-tax revenues that you're looking at are going to go up in a big way. In the case of Spectrum, he's expecting 64,480 crores in terms of Spectrum auctions, which will be completed before March 31st. In this fiscal year, he will get about 16,000 crores. This is what the cabinet decision at least says. And this that's expectation. Second is the coal blocks which are going to be allocated. The entire revenues will go to the state government.
What about disinvestment?
But the penalties that have been imposed by the Supreme Court, you will get about 6,000 crores. Third is the disinvestment.
Right.
I agree with Dr. Virmani that the Coal India and ONGC, the two big issues that should have taken off, have not taken off. One is because the coal workers have not been in tandem. But the alternative plan B, which I have been talking to different people, sir, is that Indian Oil, NMDC, BHEL and NALCO. These are the four companies which are being put up.
These are all political issues also.
I think Badri's point on non-tax revenue is a very good one. Yeah.
Yes.
I agree.
Yeah, no, I think that's basically, I saw some statement that because not conducive market conditions, they are postponing the disinvestment. I think that's what the point they raised, I mean, the press. Regarding the borrowing program, I just wanted to highlight, despite declining the nominal GDP growth, we have not reduced the borrowing. I mean, the number that we have is only at the levels.
What Renu is talking about, you know. Renu, one question is this. Now that the inflation, it is now everybody agrees that, you know, we have come to a low inflation era. It will sustain for over a period of time. But do you think that, you know, the global crude prices is also, we are seeing this low global crude oil prices will continue for some more time, or you think that this is one variable which can upset the apple cart?
Well, first of all, at the outset, I'm not going to forecast or take a view on all prices, but from all accounts that I have read of, including the Reserve Bank's own emerging view, which is that the decline in oil prices to current levels is likely to endure at least for over a year. So that gives us plenty of breathing space. And in particular, I think it helps government repair its balance sheet considerably. And yes, as you said, it's one variable which at one stroke, actually it improves the fiscal deficit, it improves the current account deficit, and it helps inflation. I mean, given the high energy independency that India has upon oil imports, no macroeconomic policy can achieve in one swift stroke what the plunge in oil prices can help achieve. So in that sense, yes, it's a blessing. It looks from all accounts that it's going to stay and last for at least this year. And therefore, I think it's a very good opportunity to carry out through some reforms, in particular on the internal balance sheet and even on the external balance sheet side, actually, repairing the current account deficit. Even though the current account deficit has come down, it isn't really fundamentally repaired.
Dr. Virmani, current account deficit, the trade balance has improved, but do you see it as a positive because exports have, exports have declined quite sharply?
So the other side of the coin of declining oil prices and commodity prices is that global demand is very weak.
Exactly.
So that is something which sometimes discussions forget.
Right.
So it's good you brought it up. And I see that is really a very important issue that we mustn't forget it, at least the government must not forget it. Because that is why we say that it has a space or a window of 1 year to repair some of the things.
Okay.
Because you are going to get this whammy.
There is a 1 year
There's going to be
window.
an export problem.
Exactly.
There is going to be an export problem because global demand is weak. So it's even more important to do the domestic reforms and do the domestic structural changes to put on a sustainable path.
Okay. Bhanu, what could be the pitfalls or stumbling blocks in the economic recovery now? One of that, as he pointed out rightly, the exports not growing, it should be a matter of concern.
Yeah, I think exports, I think one needs to accept that at least for next 1 year, you're not going to really see a recovery in exports because the world economy is not really in a great shape except US. And if you look at the December numbers, even in the Christmas month, the gems and jewelry exports have declined. I mean, that is something.
So what are the other problems which the government could face? In spurring economic recovery?
No, I think when you have a recovery, I mean, you also see that there is a increase in the imports, right? So when you look at the current account deficit, you need to look at your growth target also. The 2% current account deficit is consistent with 6% GDP growth.
Right.
So I think if you are growing at 9%, I mean, it doesn't matter if you're having current account of 3% or 3.5%.
Okay. Badri, very quick last words.
See, the biggest issue, what I think he will face is that the fiscal consolidation which we were expecting will happen. That seems to have not yet taken off. For a simple reason that, normally last 1 quarter, there is always an expenditure.
Yes.
We'll see 5 to 10% is what is indicated. But this time, till now, there is no directive such to that extent. Will expenditure overshoot the estimates is a big question.
Okay. I think on that note, we need to end. These are all issues which we'll continue to discuss as we go along. As the budget approaches, I'm sure all these issues will come back into focus. But what the RBI governor has done, apparently everybody seems to have welcomed it, and we'll have to see now how the government will follow up on that. Thanks to all my guests, Renu, Kohli, Arvind, Virmani, Bhanumurthy and Badarinath. Please keep watching. We'll come back with another issue, the big picture, same time on Monday. Meanwhile, have a great weekend.